On the line with us, our old buddy, Professor Richard Wolff, the economist, the co-founder of democracyatwork.info, the author of numerous books. His latest, The Sickness is the System, When Capitalism Fails to Save Us from Pandemics or Itself. Democracyatwork.info, rdwolff with 2fs.com, and Prof Wolff on Twitter. Professor Wolff, welcome back. I'm wondering, I've been watching this whole Bitcoin thing for a while now, ever since it kind of appeared on the scene. And it strikes me that what we're looking at is something very similar to the Dutch Tulip Mania, where something that was not a currency functionally became a currency as well as a commodity. It could be produced, it could be, and marketed. It could be produced in large numbers, in fact. And then the bubble burst. How is Bitcoin not the same thing as the Dutch Tulip Mania? And maybe you need to, even if your thinking runs along my lines, or even if it's the exact opposite, we should probably explain to people what the Dutch Tulip Mania was.
Yes, back early in the 18th century, people got terribly excited about this new kind of flower. The tulip is a remarkably beautiful, particularly in terms of its color, and it became a kind of fad, if you like, widely admired, widely purchased. And so it occurred to people to begin to buy and sell tulip bulbs and to begin to function as though it were money. People shouldn't find this bizarre. In the history of the human race, money has been seashells, and it has been bits of metal like copper and gold and silver and other things. So there's a long history of various kinds of commodities taking on another form, whatever they were before, jewelry or a flower or whatever it was. They then become mediums of exchange. People use them to sell whatever they're selling for that thing, like a tulip bulb, and then turning around and using the tulip bulb to buy other things, or as a store of wealth. In order to hold your wealth in a form that could be easily transformed into something else, you hold gold, or you hold the tulip.
Yeah, and if I could jump in real quick, sure. My recollection is, and I studied this in high school, so that's a long time ago, but my recollection is that the tulip bulbs went from, in terms of today's dollars, from being worth $2 or $3 a bulb to being literally $16,000, $17,000, $18,000 a bulb back in the day, back in the 1700s. Yeah.
Right, because what began to happen is that the interest in using the bulb as a dollar got way out ahead of how many bulbs there actually were. So. And then the price started to be bid up, and then people came in who didn't care about tulips as flowers and who didn't really care about tulips as money with which to buy and sell things. They wanted in on something that was going up in price really quickly, and they hoped they would be nimble enough to buy it at a price lower, hopefully a lot lower than what they could resell it. And for a while, speculators, if you want to call them that, began to come in. And of course, this is a self-fulfilling prophecy. If they come in with that intention and they can begin to do it, then others want to do it and they get in on it. And by the way, everything we're talking about has an application to Bitcoin and to the many, many other cryptocurrencies that have followed in Bitcoin. Let me say a couple things, though, about it that also come from the Tulip Mania. At a certain point, it didn't go very well. The price stopped going up, and an enormous number of people who had bought them, the tulip bulbs, in hopes they would go up, now seeing them go down, dumped their bulbs to get out before it went further down. And of course, that too is a self-fulfilling action, because when you dump so it doesn't go down, it goes down even faster, bringing more dumpers in, and the happy ride up is followed by the disastrous ride down. Look, Bitcoin, just to take the last year, begins a year ago, roughly $60,000 per Bitcoin. By a few months later, it's down to 30,000. That is, it dropped by half. Then again, it went up to 70,000, and today, and then it dropped to 35,000, and today it's around 39,000. This is a wildly insecure way of investing or of holding your wealth. I mean, the dream is to get in on the low point and ride it up. But you never know when the up is over until it turns into a down. And if you're not paying attention literally every hour, the thing can disappear on you very, very fast. This is an up and down instability that no major currency, such as the dollar or the euro or the Japanese yen or the Chinese yuan, they don't move anything like that. So you may not get the big up, but you're certainly not going to get the big down. And therefore, people who are attracted by the wild numbers should be very, very careful. Having said that, there is an element here that is even more important in the long run. The United States dollar has been the world currency ever since the British pound stopped being that because of the collapse of the British Empire, and so the pound no longer could or did play that role. The American empire, and I know this is hard for people to get their heads around, the American empire is in growing difficulty, and the questions and the challenges to the US dollar are mounting. And people around the world are noticing all of that. Not so much here in the United States, because it's hard for us to face it. It was hard in England and Britain for them to face it as they went down over the last century. But the reality is central bankers, wealthy corporations, rich people around the world wondering how to hold their wealth are more and more anxious about keeping whatever portion of it they have invested in the US dollar. So they're moving more and more, for example, to the Chinese yuan, because that looks like the up-and-coming empire, or diversifying more into Europe or Japan and so on. And here comes the new option, cryptocurrency. And so there begins to be this official interest in having some kind of relationship to cryptocurrency, not so much because of a belief in it as a desire to spread your risk so that you're not in this period of shifting empire, that you're not caught with all of your eggs in one vulnerable basket. And that's giving a little bit of legs to the Bitcoin and some of the other currencies, and leading some businesses to accept payment, at least to a limited extent. But again, let me warn you, and there the Tulip Mania is a good example. It is not secure. The notion that using blockchain technology makes sure there will not be chicanery, illegality, manipulation, that is a mistake. We don't even know what kinds of technological breakthroughs are being worked on now by people who see the kind of money they could make with a volatile up and down currency like this in a world that is changing so dramatically as ours is. So I would take caution. If you're going to go in there, be very, very careful. Do not commit anything like a major part of your asset.
Yeah, sounds like wise advice. Professor Richard Wolff, his new book, The Sickness is the System, democracyatwork.info. Professor Wolff, thank you so much for dropping by.